Hey, so good morning, everybody, and welcome to our Trading Week Ahead broadcast. I hope you're doing well here on our Saturday, June the 4th. Already June here in 2022. Time flies when we're having fun. Anyway, markets were choppy as heck last week. You can see we're in a very tight consolidation channel, right? The market didn't break out to new highs or lows. It's a flat, choppy week. Now, I always say that a failure to take out new highs should be seen as a sign of potential weakness, and similarly for new lows. So when you're in a congestion area and it stays there without taking out new highs significantly, Thursday was a green day, but notice please Tuesday, Wednesday, and Friday, 3 out of 4 days were red days last week in a downtrend after a little bounce in a downtrend. So we're still very much bearishly inclined. I went in, I think I bought like 400 additional UVXYs and some more TZA and SQ. So I'm bearishly positioned into next week, quite a few $1,000s worth of inverse instruments. Anyway, the main takeaway is when you use 4050 as support and 4200 as resistance, obviously. And as we're taking a look at this, we want to see, is the market able to stay above that ceiling? I don't think it will. I think it's going to go back down, but we'll see. If the market may rally up, who knows? But we're still in a downtrend the last couple of months, so let's stay bearishly inclined. If we take a look at our volatility index, you can see the VIX is down there at 24. Let's see. Right near 24. Now, the one thing I want you to, the number one thing, and I told my traders in the live room this, that I want us all to pay attention to next week is kind of that VIX line in the sand. Hey, John, if you have a question, just type it in the chat box and I'll answer. Thanks for raising your hand though. Anyway, the number one thing I will tell you this week, as I did last week correctly, was to keep an eye on that 24, 25 level. Right near, we're kind of right in a band here. If I had to pick a number, the reason I drew the 25 was that was the previous peak right here. The main point is, what does the volatility index do next week? And again, of course, if it goes down under that 24, that will be a bullish sign and the market will be going up. But if it bounces back up over 26, so that's what I want you guys to keep in mind. More important than the S&P is going to be the VIX. You want to see if the VIX gets under 24, then we go long, a long bias, or if it gets back up above 26 like it had been the whole past month and a half, then we want to be bearishly inclined. So keep an eye on the volatility index. Any good professional trader does that. We want to stay focused on where the next phase of volatility is going to run. And one thing I want you to pay attention to also is some of these potentially oversold due for bounce charts, right? Ones like Disney, Netflix. So for you, those of you who are swing traders, that maybe 3 places to look at are energy, as usual, like Occidental Petroleum. Oxy's our favorite. Some of the high multiple sold down or starting to bounce charts like Disney, Netflix, and PayPal. I don't know if Bed Bath & Beyond's a great candidate. It got really sold down. It still looks like it's underwater, so that's still catch a falling knife. But I like Disney, Netflix, PayPal. And one of my smart traders had asked about Shopify, and that also is a good candidate for a potential pivot. It's been holding its own kind of 420s kind of resistance. So Shopify over 420, I'll be looking to buy. So those are 4 things that have been sold down a lot that may be due for a bounce. Maybe Disney, Netflix, PayPal, and Shopify. NVIDIA too is another player. So those are the kind of charts you want to play, the ones that have good business models and are not the SPACs or some of the speculative charts, but rather ones with relatively good volatility. Let's take a look at some other charts here. Now for swing traders, I would not be doing any heavy share size trading into this bounce because it's still a suspect bounce and the market's very likely to drop at some point. So now is an okay time to start putting on small trades in either strong directional charts like this SWX, right? SWX, a really good chart up here, 95 or so. Remember, energy is a good sector. SWN, Oxy, still looks good up there. Healthcare with Eli Lilly, kind of up and down. It pulled back here just lately. And Apple, of course, is the volatile drop chart. We got almost a hammer down there at the bottom, and it's starting to bounce. So this is not a time to be aggressively trading the stock market. This is a time to very tentative. The main background music is now is the time to tentatively, at least I'll be looking at tentatively trading some of these potential pivot charts like Disney, if the VIX gets down under 24, down 22, 20, and so forth. That's bullish. If the VIX, however, stays above the 24, 26 region and spikes back up over 30, then I'm not going to, that will tell you that you're wrong in your long position. So that's another way to, or very likely wrong in your long position. So until we have a return to charts that look like this, on a nice continuous trend, we're looking mostly at pivot charts, right? And whenever you're playing bounces, the best tip is trade really, really small on the very strongest charts that have high volume on the pivot. So if you're starting to see larger than normal high volume green days that are bigger than the previous 2 or 3 red days, that may be a good place above the resistance to start going in. But in this market where I'm still bearishly inclined, so I may start putting on some tentative trades, but I typically go back to cash. Another quick tip. I did play those. I was in long Disney, Netflix, and PayPal. I think it was last week, but I sold them back when the market dropped. So yeah, I think it was yesterday pre-market, something like that. Yeah. So you do want to tentatively start maybe playing good, strong charts if there is a sign of a reversal, if price action is steadily going up. But what I do is I flip out of those. I go to cash if they get back inside the previous day's range, or especially if they get a 2-day low. So you can tentatively, at least I'm starting to tentatively making some very small swing trades, but not much. I'm still kind of bearishly inclined, so I think the market's still due for a drop. So, but if you want to, in the meantime, in case the market does rally up or something, you may want to take some very, very, very tiny positions. But I'm not putting any large capital at work in this market because this market is not a up market, right? This is still a seller's market. Now, one thing we did very successfully last week with some of our charts was trade things like TQQQ or SOXL on up days, right? Thursday, this is a 2-day intraday day trading chart, and you can see, day before yesterday, Thursday, this ran all the way 32 to 35. I prefer SOXL because it's got a lower price and it's still got really good volatility. It went from 23 to 26. So that's my preferred directional long chart is the semiconductor leverage long SOXL. So on up days, I play SOXL. On down days, I play UVXY and SQs, and sometimes TISA. Now the other sector, the other thing to pay attention to is our natural gas, inverse KOLD, and also crude oil still down. The inverse crude oil still way down. So it's still catch a falling knife. So we don't want to go long yet unless it gets back above at least a previous close. But short crude and short natural gas are likely in play. And the reason I say that is likely good for plays. I'm in both of those long. I just bought a little bit into the close yesterday because if natural gas ever goes back down, it's this chart will go way up, right? I'll make a lot of money. So I'm using roughly around 17 as support on KOLD, and I'm looking to scale in, especially if it gets over 25.30 above the current resistance area. So now, despite our earlier big 2-month run in our inverses like SQs, they've since dropped back down. Now, what I'm looking at is what? I'm always going to be looking at a prior resistance area to help with decision support. So I bought a little bit of SQs after the market yesterday, but I'm not going to put on size for a swing trade unless it gets back over 52. And that's in line with my whole buy above a decade value. Play it between 50 and 60, right? That's the life cycle of a swing trade in this chart would be long here now is fine, and especially over the 50 and the 52 with an exit target in the high 50s up near that 60 previous resistance. Now, what that means to you as a trader is, when you're looking at developing a trading plan, you need to figure out how to martingale up or how to scale in, position size, leg in, whatever you want to call it. So if I start off with, say, 200 shares and I double down to, say, 400 shares at the 52, I may add another 400 at 56 and then just let it ride. So maybe in 800 shares with starting off really small at 100, 200 shares. So you always want to scale incrementally as things start to go in your favor and then tighten up your trailing stop as it gets closer to an exit target. So this is a good candidate for potential bounce, I believe. Volatility is way down at 13, so we've got the UVXY down here, but near the 52-week low, right? By the way, you always, at least I always buy the 52-week low in this or TVIX or VXX or whatever volatility instrument I'm trading, because the 52-week low is almost always a buy and has been for 15 years in the VIX, ETNs, and ETFs. So we have 1116 is the 52-week low support. It's come down quite a bit from the 20, right? There's that multiple of 10, the decade value. $20 is the resistance on that chart with a shooting star or two to help you realize that 20 is in fact the resistance. And on this chart, support's down at the 1116, around 11, which is the 52-week low. So I want to scale in incrementally at every whole number. And of course, much tighter than that, as you know, if you're in my live room, we did really good with this lately. When it runs up, we want to play it to the upside. Of course, we also have our TZA, which had a really spectacular run up. Our Russell small cap inverse ran all the way to 50, right? 51, 52 up there, came all the way back down to 36. So it's got lots of room to bounce back up when it does recover. This is kind of a head and shoulder pattern, shoulder, head, shoulder. So it's still kind of a bearish reversal until a price point that'll likely attract institutional active traders and investors is going to be, you can see there it's at 39 and we never buy 9, so I would round up to 40. So I'm going to TZAs, in my humble opinion, I'll be aggressively buying TZA once it gets over, say, 40.20, 40.30. So recovery of the 40 makes sense. Hey Bob, good to hear it on the PBF. Hey Bill, Tan. Yeah, oil and energy have been around for quite a long time. You trade futures with these signals. Yeah, I'm not a futures trader, but I'm sure they can answer any questions. Yeah, I like e-signal. It's a good charting platform. I used it 20 years. So anyway, what you want to do is mark out support and resistance areas that everyone else is using, and don't trade at those exact points because obviously you get false breakouts and so forth, but trade slightly above obvious resistance areas. So in this chart, 40.2 or so is my trigger. It's up considerably, just a few dollars from where it's currently trading. But I don't want to play around with it here under the 40. I want it to get north of 40 before I put on trades. And then I'll start going in with relatively aggressive sizing in every dollar or two on the way up. And again, on this chart, where would be the exit target? All right, got a itchy nose here. Exit target would be right under the 50, right? And again, that's my $10 range. Just a reminder, if you're not yet in the live room, it's at trademastery.com/live. You can see me 5 days a week doing live real money trading and walking you through step-by-step specific price points for entries, live exit calls, re-entry calls, take you by the hand kind of silver platter alerts. So I give you exactly what to look for. And I'm a really aggressive trader. So I did 41 mil worth of order flow last year. One of my accounts alone, the main account, the Fidelity account. So I've got a lot of experience that I hopefully can share with you in our live room experience. Anyway, so that's kind of the swing charts. Now back to intraday charts. Yesterday, ST&E was pretty interesting. It did the bounce off the 11. Remember, that was our whole number pivot was the right there at the 11. And I don't recall offhand where my long trigger was, but somewhere right over the 11. It ran all the way up to just under 12, around 11.8. So that was a gap fill, right? A gap trap. A gap filled, came down to not quite the previous day's high, and then pivoted. I traded Clovis on its way up, just like it was 1,700 shares total, so not too much. But nice little run. I was buying it starting back at 68. CLVS, keep that on the radar. This one is one of the Clovis Oncology. It came down from much, much higher, and it became penny stock status, in fact. And now it's starting to come back to roaring back to life. So CLVS is my top pick for a cheap chart next week. Remember, I said that next Saturday when it's $2 a share, okay, or 10 cents a share. Right? I don't know where it's going to go, but what I like about this chart is, as always, really big upside, right? Just back 8 weeks ago, it was almost $3 a share, $3 whole number resistance, right? See the shooting star, the green shooting star right to the right of my cursor. $3 a share was resistance in Clovis. The fact that it's way down here in 70, 80 cent land, I sense one could easily potentially double one's money if this chart goes up to the 160, right? You could double your money if it goes from 80 to 160. I don't know how many thousands of shares worth a shot, but it is worth a shot. So that's another top pick for all of us at CLVS. Let's keep an eye on it. One that one of my smart traders, Mick, had mentioned was this one, HUSA, HUSA. Hotel Uniform Sierra Alpha. You can see it's ran all the way from 4.6 to 5.6, a nice big $1 run. We called it earlier. I think Mick had mentioned it way back at like 460 early in the day, and I posted an alert for the entry and exit early, and also ran into the close. So this is another one to keep on your radar next week. CLVS and HUSA. And of course, in the wide world of inverses, I like UVXY versus SOXL. I always like to teach how to pair trade in the live room too. So for example, if I'm long SQs and it starts to go down, I'll have my trailing stop within 20 cents or tighter, usually around 15, 20 cents on that one, the inside market. And then once that gets taken out, I will have also put in a long entry and its counterpart, the TQ. So good chart. Hey, thanks everyone. It's some really good charts. One technical note to pay attention to that I teach my live room members is ask yourself, what is the day's trading range relative to the prior day's range? And here's the story. Yesterday was a terrible day to trade, right? Because the range was half of Thursday's range. You can see that just visually. Hopefully you can see that the high-low yesterday, the majority of it was really, really tight range, not much to work with. Whereas on Thursday, we had 2 or 3 times the range. So much bigger range. And so what you need to do is not trade narrow range choppy days the same way that you trade wide range days. And then you'd ask me, well, Ken, that's all well and fine, but how do I know ahead of time if it's going to be a wide range or a choppy day? And we don't, but the main answer is, where does it open pre-market? Is it outside the previous day's range or inside the previous day's range? When it opens inside the previous day's range, like it did yesterday, that usually leads to a choppy, terrible market, which is what I told my traders on yesterday morning. We don't want to trade aggressively yesterday because the market's not going anywhere. But if it say gaps up over, say, 416 on Monday, or gaps down, which I expect it will, to around 408.50 on Monday, then that is a good place to trade. So the previous day's range is here. Don't trade inside that range. Only trade if we're above the previous day's high or beneath the previous day's low. Well, thanks. Yeah, some good charts. What else? One thing that can help you identify good trade setups is identify within the various ETFs which of the charts are at 2-day highs or 2-day lows. So I think it was Mick had mentioned, somebody mentioned LabVIEW, a really good run to the upside there from 580 to 650. That's an outside chart, so that's tradable. It's outside the previous day's range. SCO is tradable because it's outside the previous day's range. Probably better short than a long, but we'll see. Soxel, though, is terrible because it's inside the previous day's range. Gold is okay because it's almost above the previous day's high, so it's close to, but not quite over that 23. Of course, LabVIEW is good on the upside, or LabD on the downside. So this would be like a short at 49.30. Not a trade recommendation, and this would be long over the 670. So once you identify charts that are outside the previous day's range, that fortunately limits your number of charts to follow. So you're not following 15 charts, you may be following 2 or 3 within a given industry group or sector. So it makes it relatively easy to follow with really good directional price action and really make a sensible approach to trading based on entries and exits on outside charts. And just go back over your last, pick a number of stop losses, like your last 20 stop losses. And I will tell you, I won't guarantee, but I'm fairly certain, based on working with thousands of traders, that you'll find that your numbers are such that most of your stop losses, or actually, most of the trades that were initiated with price inside the previous day's range turned out to be stops. Okay, so you have the highest stop percentage. So stop doing that, right? Don't trade things that are inside the range. See a couple of you raising hands. Instead of raising your hand, type something in the chat box. And I don't have time to pull up charts of people's choice much here. Or if you do post it, please tell me if it's for a day or swing trade. See, someone's asking about ERF. No, it looks pretty good. Nice little uptrend. CCXI. Yeah, the only problem is I think they both are crap volume, right? Yeah, both of those charts have really terrible low volume, so they're bad to trade. You want to trade things with big volume. These have terribly low volume. We want at least 15,000 shares a minute or more. So this has low volume. Avoid crap with low volume. Those are terrible charts. Occidental Petroleum, see, that's good volume, right? 50,000. Or like yesterday's HUSA, right? I'm sure that had reasonably good volume too. Well over 50, 100,000 shares a minute. So the more volume you get, how to say, charts should look at it as a red flag if volume is low, as evidenced by the visual pattern of the chart. Looks like a lot of random drops on the page. That's a terrible chart to trade. You want something like this that's got lots and lots of volume, very liquid, very easy to trade in and out of without slippage, right? Low volume translates into a lot of bad things. People could front run it in the chat room. Some guru out there could say it's a buy, and then all his sheep will, or it's a sell, and all his sheep will sell it to your detriment. So safety in numbers, only trade instruments with lots of volume, at least 1 million shares a day for swings, or 15,000 shares per minute or more for intraday. And make sure that they've got relatively strong price action before you put on the trade. So for next week's cheap chart award, I like Clovis and HUSA. The pot stocks were up earlier. I don't think they've picked up much in the way of volume or volatility, though. They're still in sell mode. And the final thing to look at is keep an eye on some of these maybe due for bounce charts like Disney and Netflix. Keep an eye on the energy sector. It still may have room to run. Keep an eye on healthcare like Eli Lilly and others, consumer staples, defensive plays. And also, the main thing is price action for wide range charts that have bigger than average, bigger than, say, the yesterday high-low range, right? Now, if you look, for example, at the broad market, you can see our S&P is trying to bounce here, but it's still in a downtrend. So the big bull rally that only lasted 3 days is, and then kind of spark day on Thursday, but we're still in very much a downtrend. And technical analyst, I will obviously be using that 4,200. That's confirmed by the previous swing low, right? Right here. Well, here-ish. So that confirms that 4,200 is a support level that now is acting as resistance. It may climb up a little bit to the 4,250, but most likely the market, well, how to say, you want to be prepared for both eventualities. If the market goes up, I'm going to be trading things like Disney and energy stocks up at new highs. And also maybe some of the cryptos like Marathon and Riot that have been beaten down on pivots, or even some of the EV plays. If the market does go down, of course, I'm going to be in my inverses like SQs, TZA, UVXY. So that's something maybe we should do each week here in the trading week. Oh, big turnout. Thanks everyone for being here. Each weekend, you should have both a bull and a bear trading plan. Okay, and that's a specific tip for all of you. And with a really big turnout, I bring out my best stuff, my big guns. Make sure that you know what you're going to trade to the long side and what you're going to trade if the market goes down on the short side or bear market. And I like inverse instruments. So maybe you buy puts. Maybe an options trader that buys puts. Or you short the market. Whatever you do, have both a long and a short game plan each week, because especially now we're in very undecided territory. Last week was a choppy as heck week, right? Market was stayed in a very narrow congestion box. That was a very tight week because they're undecided. It's like the equivalent of a doji candle. They're uncertain. The market's clumsy, doesn't know what the heck it wants to do. And so it's not committing itself to long or short thesis. It's in a sideways choppy area. So what we want to do is trade the breakout above the 4,200 on the long side or under the 40.50 on the short side. And you want to have a plan for each of those. So mainly, I'm going to buy SOXL. I'm mostly a day trader, so I like to day trade. So I'm going to go mostly SOXL if the market rallies, and if the market sells off, mostly SQs and UVXY. And that's going to be most of my order flow, in addition to whatever the daily gappers are. Okay, but if the market sells off, you're probably not going to have any big gap up charts you want to trade because the market's selling off and it drags down everything. Like a rising tide lifts all ships and a sinking tide pulls all ships down. So if the market goes down, we don't want to go do much in the way of long bias trading. We want to go in the direction of the market and play with the trend. So the point is have both a bullish and a bearish thesis, or bullish and a bearish, 2 or 3 things you're going to trade next week for either day or swing trades. Let me hear from the bulls first, then we'll hear from the bears. All of you who are bulls or long bias or at least willing to put on that hat, which I will. I trade what the market tells me. So the market goes up, I go long. If the market goes down, I go short. For those of you who are looking for, and all that should be all of you, right? Based on what I said, what would you want to trade next week if the market goes up and breaks over 4,200? What? And hit me with your best shot. What do you guys have? Good point from Jim about Elon's laying off a lot of people. Let's see, Disney, Google, LabVIEW, okay. Yeah, LabVIEW's got volatility. TQs, right? CHGG, SPXL. Keep them coming. And it's to help your fellow trader. You had a really big turnout here today. Tell me what you're looking to go long in next week, if you don't mind sharing it with a really big audience, and I will read them out loud here as I go. LabVIEW, TQs, CGG, SPXL. Okay, spiders, TQs, ES, okay, for the mini traders, SMH. Okay, keep them coming. Let's hear just a couple more, and then we'll switch gears and hear from the bears because we're out of time. Let's go ahead and switch gears. So we got a lot of things. The TQs came up a lot. CHGG, SPXL, LabVIEW. Yeah. One thing you do want to do and Trader Wendy just mentioned this is a good point, is and to look at the relative strength of what goes up when the market goes up. Whether it's something like, for example, LabVIEW has a bigger percent change from open than SQs. SQs has a bigger percent change than SARC, the short Cathy ETF, and that has a bigger range percent-wise than TISA. So you'd want to go with whichever one has the biggest trading range, the biggest move up in the previous day for a follow-on trade if that does in fact take out new highs. How about, okay, now how for the bears? I'm all about UVXY. I'll start to get the party started. UVXY and SQs are my two favorite inverse instruments. But how are you guys going to trade if the market loses support at 40.50? Hit me with your best shot. What do we got? SQs, XLK, UVXY, SQs, buy puts, XLU, TZA, right? What else? We only got 10 seconds left. SPXU, yeah, SPXU is good. Short the NQ, right? That's good. UVXY, XLP. They fell another UVXY trader. SPXU, yeah, I like SPXU for swing. SPXU is better for swing trading short than intraday, for what it's worth. Inverses in general, right? So a lot of darts. SDS, QID, FAZ. I wonder how old FAZ, it's a finance bear, is holding up. Yeah, pretty good. That one actually looks pretty good. Actually, that is good. FAZ, probably good over 24, right? If FAZ or finance bear gets over 24, that's a good break of that previous high back in March 4th or whatever, 25 or 24, 25-ish for FAZ looks pretty good. So, all right, well, thanks, folks. We're going to wrap up because we're out of time. We're at the 10:30, I'm sorry, the 10:30 in Colorado, 12:30 East Coast time. I want to thank all of you for being with me. And I will see you guys hopefully in the live room next week. If you're not yet a live room member, do consider joining. I do not have any $2,000 courses or expensive scanners or software you got to buy. Just show up at the room and you'll get lots of training and nothing else. You don't have to buy anything else. I run my room like I were doing one of my live Las Vegas seminars that I used to do at the MGM. So I run it very much interactively. I give everyone specific entries and exits and answer questions and the rest of it. So if you're not yet a live room member, give it a shot. It's only $7 for a couple of weeks trial if you haven't trialed it yet. And it's only $147 for the monthly. So good pricing on this. And it's at trademastery.com/live. Or you can type in my old domain, tradingtheopen.com, and it'll forward over. I set it up so it forwards over here. VIX product to watch. Mainly UVXY and you can look at SVXY too, and VIXY, VIXY, but I follow exclusively UVXY for VIX. All right, you guys take care. Hey, thanks. Hey, thanks, Jim. Appreciate it, man. Yeah, QID. Yeah, that's one too. That brings back memories. There's QID, SDS, DXD. But those don't have as big percentage ranges as the one we focus on, which is why I like the SQs and the TQs, because it has bigger ranges than like QID percentage-wise. Like over 1 year chart, you got a much bigger percentage room to the upside in the ones with the higher leverage that we cover. So, yeah, good points. All right, well, y'all take care. Thank you for being here. I really appreciate your time. We're going to wrap up, and I will see you when I see you, hopefully Monday in the live room, and if not then, a week from today and Saturday. So trade smart, and I'll see you next time. Let's go get them and play it safe. Bye for now.